Hey everyone, and welcome back to another video for today. So, quick talk about SoFi because the stock keeps going down. Oh, the horror. I got a comment saying, oh, the opportunity cost on this name is something else. Yeah, one heck of an opportunity cost, right? Up 221% over the past 12 months, and year to date it's up 78.2%. Oh, the opportunity cost. Look at this, the last 3 years, 391%. Oh, the horror, right? Horrible performance, opportunity cost. Yeah, sure. So right now, as you can see, SoFi is experiencing a drawdown of 17%. Now, the good thing is that it did touch the 50-day moving average and it did rebound a little bit. We did not break it, we did not go under it and close the week under it, so that's good. Now, what I want to show you is this. We have here a 17% drawdown. There are a couple of reasons for it, and we're going to cover it in this video. Then, if we go back, we can see that back here in July, we've had a 12-13% drawdown as well before they reported earnings. Of course, since the bottom of that drawdown, stock is up 26%, and at one point it was up 60%. Going even further, we go here in May, we had almost also a 13% drawdown. Then we've had a 37% drawdown that was, of course, at the end of March and all the way through the Liberation Week. Of course, since then, the stock has done extremely well, right? We've gone from $9, $8.70, all the way to $30, now $25, $26. But we can go even further. We look at this right here. 17th of December 2024, we've had a 21% drawdown all the way through mid-January or so. And so it's not the first time that we're seeing drawdowns with SoFi stock. But when you zoom out, who cares? Every drawdown has been a buying opportunity. Why is that? Well, one, the stock has rebounded, has recovered, and then some. Second of all, the business just keeps getting better and better, which of course they are showing us each and every quarter. Last quarter was again a record quarter across the board. Adjusted net revenue, adjusted EBITDA, fee-based revenue, member growth, product growth, and management raises 2025 guidance. I actually expect management to raise guidance yet again, and I'll show you why. So first up, we've had this, the BTIG note on Upstart, right? These horrible numbers here took down Upstart, took down SoFi and the other fintech players. Then we've had this post by SoFi's Investor Relations to Brad Stock Market Nerd and Chris from Data Driven Investing, as our CEO Anthony Noto said at the Goldman Sachs conference at the start of September. So after August, credit is also performing well, and so we've seen no change there, a reflection of our consistently strong underwriting capabilities. Then we've had the same BTIG come out with a correction, a big correction actually, because the numbers that they're giving us here are far from the numbers that they gave us a couple of days before. A couple of days before, this has cost billions of dollars in market value losses because of this note. So yeah, sorry, FYI, we were wrong about the numbers, so here are the actual numbers, which look a little bit better, But okay, this is what has happened. And as I've shown you in the previous video, if we go back and listen to the analyst conference and listen to the comments from the management, we see it again and again. SoFi remains confident in its credit outlook and overall growth due to its disciplined approach, its proven underwriting engine, and the ability to scale originations with stable partners. That doesn't change. Well, it continued, because we've had this come out more recently. YipIt data is out on SoFi this morning showing personal loans volume down huge. That plus the Fitch report yesterday highlighting credit issues are weighing on the stock. YipIt data out this morning shows August personal loans volume are down 22%. That would indicate they're pulling back, perhaps due to the credit issues that this person here has highlighted. Some have said that this person has been short SoFi for a while now. Okay, the problem with this post is that it doesn't tell you when it is down 22%. Is it month over month, quarter over quarter, year over year. It is a big deal. Well, luckily for us, people do provide the goods. So this was posted on X by Chris, Data Driven Investing. And as you can see, yes, it is a sequential decline. So you could say seasonality is at play here because year over year growth is still pretty good, right? It's still pretty good. And let's actually read Chris's post right here. Unsurprisingly, SoFi bears have cherry-picked the only bearish part of the very bullish data. The data does show that August month-over-month numbers were down 22% from July. However, they failed to mention that it's still up 41% year over year, and in July and August combined, there was a 59% year-over-year growth compared to July and August of 2024. This was a typo here, it was supposed to be 2024. 59% year-over-year growth for all of Q3 would be $7.78 billion in personal loans originations and would be 11.6% quarter-over-quarter growth from Q2. The point of highlighting a one-month drop of 22% was to stoke fears of a slowdown in the business. The overall data show quite the opposite. The data does not show September, so I'm not extrapolating to get the $7.78 billion, so take that with a grain of salt. As an aside, Yippee Data's historical backtest accuracy actually looks quite good. Their data seems very credible, which is great since it is so bullish. Of course, when you start posting these types of things, oh, it's down 22%, in order to make sure that your agenda gets more attention, but by also misleading others, you lose all the credit, right? Because if this person right here would have said, oh, it's down 22% for the month of August, so sequentially it's only down, but it's still up 41% year over year, then okay, then that would have been fine. But he or she, I don't know, purposely did not say month over month. But of course, they know better, right? They tell us the truth. And Anthony Noto and SoFi management, who have consistently been conservative, beaten expectations, they are the one that lie. They are the one that have no clue what's going on right now. Sure. Anyways, moving on, as I've shown you before, we can see from last quarter, we can look here at the consistent credit performance, and you're going to say, yeah, but again, I'll repeat myself from the other video. Student loan net charge-offs, there is an explanation for that right here. Also, the 90+ day delinquencies, if we look at the performance, that has also become better quarter over quarter. Looking ahead, looking at the targets that they've set for themselves, of course, we know the growth rates for EPS, we know their targets for 26 and onwards are above 20-25%. Still, the market does not believe that they can reach the midpoint of 67 cents of EPS in 2026. But okay, that's a story for another day, which by the way means that there will be growing EPS approximately 100% in 25 and 100%, if not more, in 26. But hey, high PE, right? High PE for a company that's expected to double earnings for 2 consecutive years already? Pretty good, no? Anyways, they said the following thing. The company has set a goal of at least 30% member growth and at least 30% product growth. Hitting these targets means more people are using more services, which naturally leads to more revenue. I will be talking with Emir about PayPal, but also SoFi, since he did do a very, very good research note on the company. And he does highlight one thing that needs to change for SoFi, and that's the amount of products per member, which has been flat for quite a while. And so the future for SoFi, of course, is quite bright. They've just launched level 1 options. They're going to launch cryptocurrencies. Again, they are, of course, ramping up SoFi Plus. SoFi Plus here is a great example of the flywheel at work. So 90% of new members are existing customers, meaning it's primarily an upsell to their current base. 75% adopt an additional product after enrolling, which validates the super app strategy. Although super app, that word has been thrown around quite a lot. We're still far away from being a super app like those in Asia or Southeast Asia. Then if we look at guidance, currently the management told us that they expect adjusted net revenue of $3.375 billion, representing 30% growth year over year, which of course has been revised on the upside. Also, member growth of at least 3 million, or approximately 30% from the 2024 levels. Remember, we started the year at 2.8 million and we said that this is very, very low because it didn't make any sense. So we are here already of at least 3 million. The updated fiscal year 25 guidance is also low. Why is that? Q1, 770 million. Q2, 858 million. That means that you're telling me that SoFi will only be able to generate $874 million in Q3 and Q4, right? No growth quarter over quarter, Q3, Q4. Doesn't make any sense to me. Doesn't make any sense to me. So I very much think that these numbers will be revised on the upside. By the way, if you look here at diluted earnings per share, 24, 15 cents, fiscal year 25, approximately 31 cents. I wouldn't be surprised if that's going to be more than that. But again, looking at adjusted net revenue for the year, I do think that this is going to be very, very easy to beat. So yes, for the next couple of weeks, at the end of October 28, I believe, pre-market, same with PayPal, we're probably going to see a double beat and a raise again. And so for anyone that's freaking out right now, oh, SoFi is down 17%. Okay, so what? So what? I fully believe that SoFi is a $100 billion company in the making. I have not added SoFi for a while now, but seeing that right now we have seen it rebound, we've touched the 50-day moving average, just on a technical basis, yes, it is 17% cheaper than what it was at the end of September. Still the very good company, just 17% cheaper. Yes, I might start to accumulate more shares, even though it is already a pretty large position for me. But it is a very, very good company, a company with an insane track record, with great management and plenty of tailwinds. And so, no, I'm not freaking out. You shouldn't be freaking out. The performance has been incredible for SoFi of the last year, this year, last 3 years, as you can clearly see. And even if we look at the last 5 years, it's up 140%. Come on now. Opportunity cost, my you know what. Anyways, $31 billion here. I'm not going to talk to you about, oh, we're going to 40 to 100, crypto this, S&P inclusion that, $10 billion of loan platform business announcement. No, I'm not going to hype up anything. S&P 500 inclusion, yes, that will happen over time. Crypto business will relaunch, yes, that will happen, probably in Q4. Okay, a new loan platform business deal, probably that will also happen. Will that happen tomorrow, next week, next quarter? I don't know. I don't care, because it's not a question of if it will happen, it's just a question of when. And I'm here with SoFi for the long run. And so I am still extremely bullish on the company. Just because the stock has been performing extremely well over the last couple of months and quarters does not mean that this is the end game. Far from it. Like I said, I do think this is a $100 billion company in the making, if not more. And right now we are at $31 billion. So yeah, that's about it for me in this video. Hopefully you all have a wonderful weekend ahead. Bye-bye.